Okay. So, hi everybody. Wanted to welcome you to today's webinar. Thank you for joining the Foundation for Animal Care and Education's webinar on charitable and tax planning opportunities for 2020 with Jarrett Boswick. My name is Annie Peterson and I'm the Education Manager for the FACE Foundation, and I will moderate today's webinar. The FACE Foundation is a nonprofit that helps to prevent economic euthanasia in our community due to financial limitations of their pet parents. Before we get started, I wanted to talk a little bit about some of the Zoom logistics, whether or not you're familiar with them. All of you are muted to avoid background noise, and the camera feature is turned off so we can focus all of our attention on our speaker. You will have an opportunity to ask questions throughout the presentation by typing them in using the chat feature. Questions will be answered toward the end of the presentation. When typing your question into chat, you will have two options. One will say everyone, and the other will just have my name. If you would like your question to be anonymous, please use my name only to send your question to, and then I can relate it to Mr. Boswick. I will now introduce you to FACE's board president and co-founder, Sini Robb. Sini's passion is animals, and she has been a loving pet parent for years. Today, she will introduce our speaker. Go ahead, Sini.
Thank you, Annie. Thank you very much. And this is one of many Zoom lectures that we've done, webinars, and we're very happy to have you here today. So Mr. Jarrett Boswick grew up in China, and he returned in the United States in 1991 to begin his college education. He earned his Bachelor's of Arts in International Affairs degree at George Washington University in Washington, D.C. His Juris Doctorate degree was from Gonzaga University of Law in Spokane, Washington, and his Master's of Law in Taxation from the University of Washington School of Law in Seattle, Washington. Ooh, that's a long one, you guys. My husband and I met Jared in 2006, and we were seeking expert advice to refine our estate planning. At that time, he was a partner in a Chicago-based law firm, and the year before we met him, he had been named one of the top 100 attorneys in the United States by Worth magazine. The leading lawyers network named him as one of the top attorneys in Illinois in the area of trust, will, and estate planning. So you can understand why Ira and I wanted to meet this handsome gentleman you're going to hear today. He also practiced as a litigator and has a stellar record against the IRS. He's never lost a case against the IRS. And of course, that was very convincing for my husband. So to get real personal about this and thinking about our own crossing over Rainbow Bridge, it's not a popular topic, but it's really important. And what's really significant is what will happen to our surviving pets and their remains. So discussion of our pets and even drafting a pet trust is very important to our family. And that's why we brought Mr. Boswick here to you today. But he is also, this is the best part of his stellar career. He's a FACE Foundation board member. And he founded his own company. He also serves as a partner, general counsel, and co-founder for Spirit Capital LLC. And for this webinar, Jarrett's going to talk about charitable planning opportunities, including pet trusts, where you can learn more about protecting your pets for the future. So I'm so honored to present fellow board member, fellow dog rescuer. I helped him rescued his two dogs recently, and just a real good friend of FACE and a friend of all of you. Thank you very much. And Jarrett, take it away.
Thank you, Sini. I appreciate it. I'm blushing a little bit, but I do appreciate the introduction. To the attendees tonight, we're going to cover two topics, as Sini mentioned, and it's my distinct honor and pleasure to be able to speak with all of you tonight, because we're going to cover a couple of topics that are near and dear to my heart. The most important one of which is, how do we make sure that our loved ones, our companion animals, and our pets that are part of our family, how do we make sure they're cared for in the event of our demise, and that we've been thoughtful with all of their needs and wants as they continue to age gracefully, as we would in any other part of our estate planning. And then secondly, it might just be a topic that's near and dear to my heart as a tax lawyer, but we're going to talk a little bit about here in 2020 with all of the I guess the constellation of unique attributes that this year has brought us, whether it's the pandemic and the election and all the things that are going on in the economy. 2020 actually did have a couple of unique things that happened that can help people who are thinking about giving and would consider giving to FACE as part of that program. So if you'll bear with me, and if you'll trust that my technology skills are as good as my talking skills, I'm going to share a couple of different pieces that I've prepared for tonight to go on this walk with you. And I know, as Annie mentioned, that if there are questions or things that pop up, please don't be shy. I hope that this will be conversational. And if we get pressed for time or other things, as long as we have your question and Annie knows how to reach you, I'll be able to respond to you directly or offline if that needs to happen. So without further ado, let's talk a little bit about pet trusts and why they're important. And in fact, let's talk about why they happen to be incredibly unique to everyone that's probably sitting in the great state of California. So one of the things that is unique about pet trust and pet trust law is that the earliest adoption of this concept happened in California. California was by far on the forefront of this notion. And it was really, when you think about it, not something that was designed to be, in some way eccentric. It actually was a very thoughtful thing, where people who had animals that they had cared for, and in some instances, this started in the idea of these types of trusts started in traditional trust law with people that owned things like ranches and owned things that related to commercial livestock and things of that nature. Well, that eventually migrated to our conversation tonight, which are pet trusts, and how and why do people use them, and how and what are the underpinnings of how do they work, and what do you have to do to make sure that when either during your lifetime or after your death, you have the certainty of knowing that if the proper pen was put to paper, that there's a vehicle there to safely take care of your animals and to make sure that they're cared for pursuant to the terms and conditions that you wanted. So I've got a few slides here, and I'm going to delve into a little bit about how the California statutes work. I'm not going to read them verbatim, but I am going to at least paraphrase them. This is a summary of how it works in California, and it's certainly a presentation that if someone would like to have it, or in some other capacity, we can make sure that you at least get this outline in your hands so you have it for a quick reference. So what are pet trusts? Well, a pet trust is a legal entity, and it's established for the benefit of one or more of your pets. You can have one trust that will handle the affairs for multiple of your pets. You could have a pet trust set up for each of your pets, and I'll explain to you why somebody might do that depending on the types of pets and companion animals that they might have. But in its simplest form, if you were going to determine, do I have a document that properly sets up a pet trust? Under California law, there are 5 elements to it, and the 5 elements are listed right here. You have to identify the pet, you have to appoint a trustee, and you typically have to name a successor trustee. You have to determine how long the trust will last, and I've never seen a pet trust created that didn't last for the life of the pet or the constellation of pets that were being covered. You get to set forth a standard of care for pets. And just as a sidebar here, people have come up with very unique things that they wanted to do in this. The most famous one that you may have heard of involved the late Leona Helmsley. She had set up a pet trust for her favorite dog that was still living when she died. The dog was quite young. It actually lived for about 8 more years beyond her life. And the terms of her pet trust said in the standard of care that the dog was to be walked 3 times a day, and that the dog was to be in the room or to have a TV in the background so it had noise associated with its daily routine, etc. And she was very, very specific in the things that needed to take place in the standard of care for her pet. And then the last piece is that the powers that are vested in the trustee, and these powers can range anywhere from the trustee being able to take the pet and care for it in the manner that the pet had been cared for. So if the pet had typically gone to doggy daycare or doggy day camp, or the pet had had typically gone on vacations or things of that nature with them, the trustee had the power to make sure that those sort of standards of care and those things were allowable. Most importantly, though, the trustee had the power to care for the pet, care for its medical needs, and to make sure that it was safe, secure, and in a loving environment. Now, in California, there are two types of trusts that can be created. And this isn't anything that's overly novel. Under the nomenclatures, that you have a statutory pet trust, which is something that I or any of you could set up during your lifetime. And you have a testamentary pet trust, which is something that literally springs out of your estate planning at your death. And the statutory pet trust is really very basic. It's a pet trust that's set up, it's pursuant. There's a provision of the California Probate Code that governs this. That part of the code especially requires that the trustee has to follow the terms that are in it. It allows third parties to enforce the terms of the trust to benefit the pet. And I'll pause there for a second. Sometimes the reason for that provision has to do with the fact that perhaps when this trust came into being, it happened at a time when the pet's mom or dad was deemed incapacitated and unable to care for the animal. Well, this would be the type of trust that would allow for assets to be set aside to care for the animal. And if for whatever reason the trustee wasn't doing their job, the trust can name individuals, almost like a guardian, that can look in as to what's happening and make sure that the trustee is doing their job relative to the pet's care. And in that vein, it allows the probate courts in California to remove an existing trustee and appoint a new one when there's a finding that the trustee isn't following the trust according to its terms. So this is the type of trust, a statutory pet trust, that is sometimes used, and sometimes used in anticipation that what will happen if someone is dealing with something like the decline of dementia and their ability to truly care for the animal, and in lieu of having the animal unavailable to them in some way, and in lieu of having the animal simply surrendered, et cetera, if they have the means, a statutory pet trust can be set up, and the pet will have the ability to be cared for and be managed properly by the trustee in a fiduciary role. The most common of these types of trusts, however, is the testamentary pet trust. Now, testamentary pet trusts, and for any of us that are on this call who have done any even basic estate planning, a will or a revocable living trust, or any of those types of things, this is a trust that's in the exact same vein as those. And what this means is that upon the death of an individual, they have a document that sets forth the terms of what's to happen with their estate. And lots of times this concept has been talked about in the nature of assets like my house, my checking account, my brokerage account, any other assets or investments that individual might own. In order for them to be distributed according to their game plan, those terms and conditions are articulated through a trust. Well, one of the provisions of that trust, that revocable living trust that becomes the roadmap for the administration of their assets after death, one of the provisions that people include in their revocable living trust is a pet trust that comes into life after their death. And the reason why that trust would exist would be because at the time of their death, they have one or more pets that are still living, and they desire that after their death, those pets would be cared for in the same manner and in the same standard of care that they were receiving when they were in the decedent's care. And similarly situated to the prior slide, the trust itself has some very discrete terms. It sets forth who is to be the trustee of the trust. It sets forth the amount of assets that should be set aside to protect the pet or the pets involved. It would determine whether or not there are multiple pets or a single pet. And it would also include language regarding the pet's standard of care, habits and routines, morning walk, evening walk, likes and dislikes. Is there a routine healthcare model that had been used? Were they going routinely to the veterinarian for checkups, et cetera? This is the type of trust that would provide for the provision of health insurance coverage for the pet, so that even if it was catastrophic health insurance, you still would be empowering the trustee to take and use some of the assets that were set aside for the pet to make sure that they had access to the best possible opportunities for proper health care, including the payment of health insurance premiums for certain types of maybe morbidities. Now, I'm going to come back to something I said early on, which is you can have a trust like this, which is set up for multiple pets that you might have. I, for example, have 2 fairly rambunctious miniature Aussies that we rescued about a year ago. And it would be very likely that if something happened to me or to my wife, our trust provision for this states that they are supposed to be kept together. They've never been apart. And so we would have one trust that would have a term that would, or at least would go or run as long as the survivor of them should live. So if one passed away and one was still alive, this trust would still be there. But that's a unique situation to my situation. There are other situations where you might have an individual that has dogs like I do, and they might, for example, have a bird. And the lifetime cycles for birds versus dogs are 2 totally different things. There are birds that can live into their 70s if they're kept healthy and maintained properly, et cetera. So sometimes when you have different types of animals involved, people will set up a separate trust because the things that they need to think through for those animals are different and along different time horizons. So it could be that perhaps they have something that's more of an exotic animal that requires, a greater deal of healthcare or other special needs. Those would be all things that would be typically considered when one's considering a what they call a pot trust with all the animals versus separate trusts for each individual animal. And the bottom line here is that the person that actually cares for your pet after your death doesn't necessarily have to be the person who is the trustee or the successor trustee. In fact, in many instances, the person that is the trustee of this type of trust is sometimes it's viewed as a better result to have a person separate as the trustee versus the person that's the caregiver, so that there's some checks and balances relative to what is happening with the pet after the decedent has died. And while I think we'd all love to think that asking your best friend to take care of your animal and giving them a lump sum of money to make sure that it happens that way, I can speak to the fact that whether it is dealing with pets or sometimes whether it's dealing with other aspects of a person's estate, sometimes when you're not there to know that it's happening, people forget that, and so they get a little bit sloppy with how they manage their fiduciary duty to the animal. So there's no prohibition to setting aside funds in a trust to benefit your pet or pets, even though they might be cared for by another individual. And the bottom line here, as you can see at the bottom of the slide, is that the trustee's sole job as the fiduciary is to manage whatever assets are set aside for the pet, to manage those assets in the pet's best interests and for their lifetimes. So to recap a little bit, you can set it up during your lifetime. And the reason you would do it is because there's some concern that you may not be able to care for them in the future. You can also do it at death. And if to do it at death, you need to have your proper estate planning documents contain the provisions that establish the trust upon your death. And that trust will only be established to the extent that the pet or pets that you identify are living beyond your date of death. Beyond that, you're looking at what could end up being a fairly clunky situation if you don't have this properly articulated and properly written down in your estate plan. So for anyone that's on this phone call, if you're considering and you are open to the notion that if you are no longer walking above the mud and we are all buried beneath, and someone or something needs to intervene on behalf of your beloved pet or pets, then the safest way to make sure that happens is to make sure that at a minimum, your estate planning documents have a provision that call for and establish a pet trust upon your death. Now, there are a couple of other things to talk about here. And some of it will be repetitive, but I'm going to belabor a point for a moment. And since I guess as a lawyer, I get paid by the word, but this is pro bono, I'll have an opportunity to answer some more questions at the end. But probably the three most important things in a pet trust that someone needs to consider are these three bullet points. First and foremost, choosing who the right trustee is going to be. And I would submit to you that the right trustee is, and who that person or that series of people will be, they need to be an individual that know your goals. They've understood your love for the animal. They understand the standard of care for your pets. This is not somebody that you would just pick and say, here, take care of them. And they wouldn't be at least in tune with what your heart and your head is saying with regard to their future care. The second thing is, be specific in terms of the things that you want the trustee to have the broad discretionary power to do. For example, and like I said, the Leona Helmsley example is always a good one. She had provisions in there that dealt with, as I mentioned, keeping the TV on for 4 hours a day in the afternoon so the pet could listen to TV. Her pet, I believe there was a provision that said her pet was to go to sleep listening to Mozart. Now, some of this might seem eccentric, but the fact is that when she crafted her document, and then when it was challenged by her heirs, and then when her heirs lost that challenge of the money set aside to benefit her beloved pet, one of the things that the court cited as a basis for that was the fact that she was so specific about what it was she wanted to do that she clearly was competent and had the competency to create this type of vehicle to benefit her animal. So being specific about things that might just be unique to your animal, your pet, is really, really important. And I would encourage you, as you're thinking through this, to come up with a list of those things that you think are necessary. I've seen things as specific as to maintaining the type of diet that the pet is currently on until there is literally the doctor's note from their veterinarian switching them from a certain type of food to maybe a type of food that's more appropriate based on their age or other health issues the animal is following. And then last but not least, and I can't stress this enough, lots of times these things are drafted and they don't include the power for the trustee to purchase pet insurance for the pet or the pets in question. If it's not in there, it will be ignored or it will be overlooked. And as a consequence of that, it will create a problem for the trustee to execute on that basis. And then finally, I think this is also something we touched on, but I think it's a good point to reference. As I mentioned, simply naming a trustee, and you can hear my dogs in the background, I apologize. Simply naming a trustee is one thing, but naming the people that are going to care for the animal is equally important. And the reason why it's equally important is because if the same person who's going to care for the animal is not the trustee, then you need to make sure that A, you're specific about that in your documents, and B, that you have an ability to make sure that those two people who are going to be put in that position will have the opportunity to, at least prior to your death, know that that is the game plan. I think that in just like caring for any part of your estate that you care about, and not to personalize it, I have 4 kids and 2 dogs, and the provisions that apply to distributing my estate for the benefit for my kids, I have specific provisions that benefit my pets. And I have made the determination that the people that will care for my animals will not be the same people that will administer the financial side of the equation for them. And it's very common, and I've been able to communicate that to all parties involved should something happen. So, this was meant, and this part of our presentation, our talk tonight, was meant to provide you with a good roadmap as to what pet trusts are, how they work, what are sort of the must-haves and should-haves in the documents overall, and what ultimately are the things that one would consider when they're establishing either this during their lifetime or this at death, and the individuals involved and the powers you would convey to them. So I can stop there if there are questions, or I can continue on to what might be a cure for insomnia, but it happens to be near and dear to my heart, which relates to some excellent opportunities in the year 2020 to take advantage of some, what I believe are some very generous provisions that were part of the CARES Act that was enacted earlier this year that relate to charitable giving and the ability to continue with your philanthropy.
So Jarrett, this is Annie. We have time, so we'd love to hear more from you. We do have a couple questions, but we'll get those in about 10 minutes. So yeah, I would say move forward. That would be great.
Okay, if you'll bear with me, I'm going to get out of this presentation and move into the tax presentation. Give me one moment. Okay, this should be it. Yes, no, I'm sorry. Goodness gracious, that wasn't the right one.
Jarrett, can I ask you one question, or did you
Yes.
find it?
Yeah, please go ahead. Please go ahead.
So there is one question that came in. So while you're setting up for the next part, so the question is, how do you deal with the situation if you become incapacitated but are still living? How do you take care? How do you make sure your pets are taken care of?
Sure. So there are really two things that happen in that situation. If the individual has been forward thinking enough prior to becoming incapacitated, for example, maybe they, at a point in time when they had most of their faculties with them, they had set up the lifetime concept of a statutory pet trust. If they had already established that trust, and the terms of that trust said, if at the time I become incapacitated, and it would have a definition of what incapacitated meant. Typical definitions would be things like 2 doctors, one of which has to be their current attending physician, are able to declare them as unable to make proper decisions for themselves or those that they care for. If that happens, and you have already created the statutory pet trust, then that pet trust will, in legal parlance, it will spring into action. And when it springs into action, the individual, if as part of their estate planning they have properly executed a power of attorney so that someone can make both financial decisions as well as healthcare decisions for them, the individual that has the ability to make financial decisions can start looking to that pet trust as the vehicle to protect their pets, to protect the incapacitated person's pets. And because you've already preordained what the terms and conditions of the pet's care will be in that statutory pet trust, even though while you're incapacitated, you may not think about it, but prior to being incapacitated, you'll have at least the sleep well at night moment, knowing that the terms of that trust will govern. Now, what happens when let's say the incapacity is lifted, so to speak? There are situations where a person can be deemed incapacitated, and then, at some point later, they're deemed to have reclaimed their capacity. Again, this allows for them to manage through the trust itself their pet's care. It's not as if they aren't allowed to continue to use those assets that were set aside in that time of incapacity for the pet's care, et cetera. And at that time, as long as they have capacity, then they would be deemed in charge of what's going on in that pet trust. And the trust itself would have the drafting nuances and provisions to do that. The other way that it sometimes happens is that individuals will have a special power of attorney that can be drafted, which will deal only with aspects of their animal care, their pets care, not their animal care, their pets care. And that it tends to be a little bit more difficult, and sometimes is harder for service providers and others to grasp, but it does require them to have a financial power that's limited to using the person's assets to care for their companion animal or animals. And those tend to be the two most common ways that it's dealt with when you're dealing with someone who remains living but is incapacitated.
Okay. We did have a few questions come in. Are you okay going ahead and answering those before we move on? Okay.
Sure.
So one of the questions, I have a rescue dog and one that is not. I have been told if I am not able to care for the dog, it is to be returned to the rescue. I do not want the dogs to be separated. Is there any way I can make sure this happens and the dogs get cared for the way I did?
Well, I think there are instances in which rescues have that type of provision. One of the things that I've seen done is that the rescue in question, where they have imposed this level of sort of a requirement in the whole situation, that so long as you're able to demonstrate to them that in the event of your incapacity, you have made arrangements for the animal or the pet to be properly cared for, and that is your desire, if there are multiple pets involved, that they would be cared for together. I really have never seen a rescue not waive that provision out of the agreement. So technically, the conversation that has to happen would be between you and the rescue, and to have them or some writing exchanged in which they indicated that they understood your desire, they understood that you were establishing a mechanism to make sure the animal remained cared for in a comfortable and a loving environment. And I've never seen the situation where the rescue organization did not waive that requirement.
Okay, great. Here's another one. Do I need my trust attorney to set up a pet trust, or do I just produce it and put it in my trust binder?
So I am, let me answer this question as safely as I can as a lawyer. This is a legal document. It has technical legal nuances and especially there are specific types of things that California law requires. So to be safe, if you have a trust attorney that has already drafted your main estate planning document, sometimes referred to as your revocable living trust, it would take them all of about an hour, in my estimation, to include a provision in there that dealt with a pet trust in the event that your pets survive you upon your death. And I think the reason why you would want to do that way is because your trust document was likely drafted as part of a system that lawyer uses to make sure the flow of your estate planning assets goes in the most logical way possible. And they will know best how to insert this provision into your estate planning document and make sure that it is not only smoothly put into the document, but that it also isn't there as a red herring that can be challenged by someone because they think, well, I didn't know they were ever going to do this for a pet. So it shouldn't be enforced. If a lawyer drafted it and put it in your document, the presumption is at all times you had the competency to do it. And it becomes very, very difficult for anyone to challenge that going forward.
Okay. We have a comment that your presentation is awesome.
Oh,
but
thank you.
Also the question, we have 7 dogs and live in San Diego. We are from Seattle and had a pet trust included in our will documents.
Okay.
Do you offer a service that would review and or update our documents to make sure we are covered in California?
I can certainly review them, and obviously as as a person that has this in their own estate planning documents. And interesting that you mentioned Seattle. That's actually where I started my career, as Cindy's bio, my bio may have indicated. So I'm familiar with all those rules. And we certainly can look to that. But if there are changes that need to be made, or if you are looking to make sure that there's a technical compliance with California law, then you would seek a California lawyer. And I am licensed in Washington State, and I am licensed in Illinois. I have worked all over the country, and we have worked with local counsel in lots of places. So if your concern is, hey, I don't really know if I have something that looks good or not, a top level review is something simple to do, and I'd be happy to help. But if there's a technical thing that needs to be redrafted, or something that we might identify that says, you really need to have somebody look at this, a local counsel right there in the great city of San Diego can help you.
Okay, great. This is going to be the final question, and then we'll move on to the next part of your presentation. And then we can do more questions later too, of course. But the final one is, are pet trusts expensive?
This is a very fluid question. And the lawyer answer, and not to be a smart aleck, is it depends. Pet trusts can be very expensive. And by expensive I mean Leona Helmsley, I'll use the example. She actually set aside $12 million to care for her pet. And that's an expensive pet trust, because that pet was getting, or the couple of pets, they were getting round the clock care. They had 24-hour attendance. They had all kinds of things that were associated with that. To set up a pet trust during lifetime, or to add a pet trust to your estate planning, is a relatively simple and straightforward thing to do. It's not super expensive. When the pet trust is in operation, and let's just use the most common variation of it, which is after any of us who are the moms and dads to our animals, we've all passed away. When that trust is in existence, it does have to file a tax return. If the trustee is doing a lot of work to care for the animals, et cetera, the trustee may be entitled to charge a trustee fee to it. So there are some expenses associated with it. I would submit to the group here, they're not extraordinary. They tend not to be overwhelmingly expensive. And most of the time, where I have seen it or I've been involved with it, the individual who's actually caring for the animal, or who has possession of the animal, they are allowed to have certain expenses and things reimbursed if they go out of pocket to help the pet, et cetera. But I've rarely, if ever, seen a trustee of one of these trusts charge a fee that was in any way exorbitant. At most, it was really, if they were out of pocket for certain costs, they usually were entitled to be reimbursed. So there is a cost associated with it, but in my experience, it's not something that is cost prohibitive when you're thinking about using a pet trust as part of your planning.
Okay, great. I think we're ready to go ahead and move on to the next part. And just a reminder to everybody who's listening, you can continue to type in your questions, and we will get to those additional questions toward the last few minutes of the presentation.
Sure. Okay, so I sometimes open this part of the presentation by warning everybody this might be a cure for insomnia. So bear with me as we go through it. But I would be remiss, both as a board member to face and just as an individual that cares about animal welfare, to not take a few minutes and highlight for our group tonight some interesting things that happened in the tax law this year that I think help individuals who, whether you itemize your tax deductions or you don't. There were some very special things that happened this year in the tax law and under the CARES Act that provided for some interesting one-time opportunities to take advantage of here in 2020. The first thing to talk about is that we have this law called the CARES Act. And while the CARES Act combined a number of different things in the law, it provided for a number of one-time only 2020 planning opportunities. So the primary thrust of our conversation to here today is really going to focus on the CARES Act and what it provided. And then the second bullet point, which is how do people who are trying to plan right now for charity can kind of give while they're living and know where it's going at the same time. And many times the question we get is, well, I would like to give to charity, but sometimes I feel like charity begins at home. How do I combine my charitable planning with some of the giving that I want to do to make sure that my heirs and my descendants are also cared for? So the second bullet point I'll go through very briefly, but I do want to take a minute to chat on that. The third bullet point, I don't know that we'll get to tonight, but I have included it just on the off chance that anybody's interested in other things that are going on right now in the tax law that lend to certain types of planning opportunities. And these would be things that you can discuss with us if you'd like. You can discuss with your counsel, your accountants. But I felt it important, if we were going to talk about these items, to let you know that there are other aspects of an individual's financial picture that they can also take advantage of today. So with that, let me jump in. The CARES Act. So the CARES Act was signed into law on March 27th, 2020. And you might say, well, how is that possible? Shouldn't we have all been on lockdown? Well, I guess it was already a fait accompli. And since the president was sitting in the White House, he was able to sign the law and take Congress's good work and turn it into the law of the land. Now, it did two important things. The first thing it did is it reconfirmed all of the charitable giving provisions of the Internal Revenue Code that already existed. And why is that important? Well, prior to the CARES Act, there had been some changes to the charitable giving provisions of the code, and there was some concern among the nonprofit universe as well as the donor universe that if certain of those previous changes that were put into law, if those were repealed or somehow erased by the CARES Act, it would be harmful both to donors and to charity alike. Well, the good news was Congress in its wisdom said, we're going to leave those provisions there. The second thing is that the CARES Act actually added three very unique provisions that are 2020 only provisions. And they fall into two categories. They fall into categories for individual taxpayers, folks like you and I, and they fall into categories dealing with corporate taxpayers, the big companies of the world and the small companies of the world that have a charitable inclination. Now, what's interesting is for individual taxpayers, they enacted a provision that said you can take a 100% deduction against your gross income for cash gifts if you itemize your income taxes. If you're a non-itemized deduction filer, you can take a $300 deduction against your income and you'll get full dollar for dollar credit for it. If you're a corporate taxpayer, they increase the percentage that the deduction that the corporation can take for its contributions to charity. So under the CARES Act, they found three areas of our charitable giving laws that they felt could benefit both donors and benefit charities alike in a meaningful way. Now, I'd love to tell you that it was simply meant to be that feel good, but the simple fact is that you've always had the ability to itemize certain deductions, among them charitable giving. But if you were a non-itemized filer, you do not get the benefit of deducting your charitable gifts in the same way. So this little second bullet point for even the $300 deduction, while it may seem small in the grand scheme of things, I would submit to the group today, this will be a very meaningful provision for 2020 giving overall. Let me go through a couple of examples of this. Under the prior law, if an individual was going to make a gift to charity and that gift was cash, they could deduct the cash gift up to 60% of their adjusted gross income. Well, what does that mean? In the paragraph below, it meant if an individual had made adjusted gross income of $50,000, they could deduct up to $30,000 in cash charitable contributions. Any amount in excess of that $30,000 would be deductible in future years. So in prior law, if I had made $50,000, but let's say for whatever reason I had been saving to make a $50,000 gift to my favorite charity, if I'd have made that gift in 2019, I would only have been able to deduct $30,000 of it, or 60% of my AGI. But under the current law, that same gift becomes 100% deductible against my AGI. So in the example, if I had a $50,000 AGI and I made a gift of $50,000, I effectively eliminated my entire income tax liability. Put another way, the government completely subsidized my gift to charity, and that gift is in cash. So one of the reasons why we feel that this provision for itemized taxpayers is important is because lots of times itemized taxpayers have sort of a rhythm in their gifting. Perhaps they're giving a certain amount each year, and it's fairly structured, and if they can afford to do it, this might be a year where front loading that gift to maximize their deduction makes a whole lot of sense rather than paying it piecemeal. And of course, this is dependent on their ability to maybe increase their gift this year and spread it out over and work with the charity to say, I'm giving you all this money up front, and I intend it to be used over the next 3 years or 5 years or whatever it is. But this is the type of provision that can allow for taxpayers that are already in a structured giving program to consider whether or not to accelerate it and take full advantage of this cash contribution deduction of up to 100% of their AGI. The second area of the CARES Act that I think is interesting is that if you don't itemize your deductions, you can deduct up to $300 a year in charitable contributions. The deductions have to be in cash, so this isn't like dropping off clothing, et cetera, to Goodwill or Salvation Army, et cetera. And it has to be given to a public charity that is classified under 501c3 of the Internal Revenue Code, which, by the way, FACE is. Contributions to things that are like privately owned charities, private foundations, donor advised funds, et cetera, they will not qualify for this deduction. So if you're an individual who doesn't itemize, but you're thinking that, gosh, I can afford to do something this year, et cetera, this allows you to have an extra little kiss on your tax return, as they sometimes describe it, where your $300, which would normally be ignored in this whole process, is now providing you with the tax benefit. And we feel that for a number of donors that are non-itemizers, but who give in a fairly rhythmic way, will allow them to say, well, I usually give, let's say, $20 a month to my favorite charity. Well, that's $240. Well, why don't I up it to $300 for the year? And I believe, and I think some of the statistics that will come out from this provision is they will bear the thought process that by allowing this to happen for non-itemizers, it actually encouraged them to step up their giving a little bit, even though this has been one heck of a year, and we are in a period of time where perhaps people are looking at their charitable giving in light of maybe their job situation and other things, and they're wondering how they can make it all work. Well, one of the ways that can happen, or maybe they can justify this thought process in their minds, other than for the good of the charity, is that they will get a benefit of this, even though it might be limited to $300. And then lastly, and this is for anyone that is in business and has a corporate environment in which they have a distinct and a clear view towards philanthropy. Under the CARES Act, corporate philanthropy has been increased from being deducted from the corporation's adjusted gross income from 15% to 25%. And why that's important is because there are many instances in which corporations could give more, they're willing to give more, but they can't justify it in their financial statements or other things that they're doing because they're not getting an extra or an intended tax benefit from it. So by increasing this, one of the things that was hoped under the CARES Act is that corporations, and let's be honest, there are lots of corporations, and if you read the market news and other things that are happening today, while I understand that the employment statistics and things may be in one direction, the corporate news that's been coming out has actually been fairly strong through the year. And so by increasing this deduction, I think everyone, including me on this phone call, is hopeful that good corporate citizens will find it both in their hearts and their wallets and their balance sheets to continue to give aggressively and perhaps even more than usual than in their typical corporate rhythm. So those are the three provisions of the CARES Act that are uniquely designed for 2020 planning. Will they be extended? It remains to be seen. They do expire on 12/31 of 2020. So for any of us on this call, or for any of us that, as we go into year end, are having conversations with our financial advisors, our accountants, et cetera, these would be things to keep in mind and perhaps ask questions about as you're thoughtfully thinking about how your year end picture looks and what it is that you can afford to do, and then what benefit you can also obtain from it. I can stop there if there are questions. I don't want to completely monopolize our time on this one topic, but we have about 10 minutes left, and I can go into the next section about combining these things with some advanced planning concepts, or I'm happy to field questions in the remaining time that we have.
Well, we do have a question.
Great.
So we'll go ahead and go into that. Can you please speak to the case where a person doesn't want a trustee involved for years over the life of a pet to be involved in overseeing the pet's care? So far, I have opted for a one-time lump sum to the caretaker.
Okay, so that's actually a great question. There's nothing wrong with doing that. I think the risk that you run is that at some point the lump sum, depending on the age of your animal or animals and their needs, whether or not the lump sum is enough such that if the animals live beyond what their life expectancy was, or if their medical needs become significant enough that they require more assistance. One of the reasons why you setting aside an amount in a trust that would be invested, it would be there to care for those rainy day moments, is so that your caregiver isn't put in the awkward situation of knowing that they receive some money up front, and that could be, let's say, 5 years, 6 years ago, and 5 or 6 years hence, all of a sudden the animal they're caring for, your pet, requires multiple thousands of dollars of healthcare, and the lump sum gift that they received far and away would not have covered that in the first place. What are they to do? So the hard part about answering your question and saying, well, giving them just a lump sum is a terrible idea or a great idea, is the fact that as we sit here and talk today, we're trying to anticipate the unknown. And so one of the ways that we do that is by making sure that when we set aside assets for the care of our animals, et cetera, that we put someone in a fiduciary role to oversee those assets, and their sole job is to manage those assets for the benefit of the pet in all of its circumstances for its entire lifespan. And so could there be healthy tension between the upfront lump sum gift and having a trust involved where a trustee is kind of checking in on the health and care and needs of the pet who's being cared for by somebody else? There could be some healthy tension in that, but there's probably equally as probable a healthy tension that the lump sum that may have gone to the caregiver, if the pet exceeds its life expectancy or requires additional healthcare needs that were beyond what anybody expected, then the question for that caregiver is, what do they do? Will the pet's care be compromised because they don't feel like the caregiver, were economically compensated enough for that contingency? I hope I answered that question as best clearly and as best I could.
Okay, thank you so much. I'm actually going to turn my video on. Hi, everybody. Right now, we don't have any pending questions, but I know that Sini wanted to have a few words at the end.
Well, I just want to thank Annie for moderating this event for us and posing the questions to Jarrett. Jarrett, I realize that you are a huge family man and dog lover, and you took some time on your Friday night with your family to present to us. And so on behalf of the rest of the board of directors, our staff, and our FACE family, which is our people that I'm sure are on the line today, I just want to thank you so much for your time. It was a wonderful, wonderful presentation. I've heard you speak about these things many times, and every time I come on, I learn something new. I also know that you have said that if anybody has any general questions, we didn't talk about legacy gifts and the estate planning. We talked about estate planning, but not legacy gifts. And if anybody has any questions regarding their philanthropy or their trust, that they know that they can pose their questions to Annie, and Annie will give them her address, and she'll forward them to you. And I know that you'll take care of anything that needs to be answered.
I'm happy to do it. I'm thrilled with all the questions. This was a treat for me. I don't know if you heard my dog's going a little crazy in the background, and my son coming down the stairs knowing that I'm on this conference, trying to grab him or do whatever, but I appreciate that everybody was willing to bear with me in that moment.
We've all been there, Jarrett.
Sure.
Don't worry about that. So yeah, I wanted to just finish up too by saying thank you so much to everybody. All of our participants today are going to receive a follow-up email with a survey, as well as a link to this talk. It's been recorded, so we will be able to send you that link. My email address, if you have any further questions, is admin, ADMIN, @faith4pets.org. And I'm more than happy to forward those questions on to Jarrett. So thank you so much. And everybody have a great weekend.
Thank you all.
Terrific. Thanks, everybody. Thanks for joining us tonight.
Thank
Cheers.
you.
Thanks.